This is Fintech Insider News. This week, Ant International raises $1.2 billion in a Series A round. Teya expands its business account with bill payments and cashback cards. And Revolut secures an Australian banking license. We'll be tackling all of this and more on today's news show, so don't go anywhere.
Hey folks, David Breer here, CEO of 11FS. Here's something you might not know about me. I get a lot of people trying to impersonate me online, fake profiles, scam emails, the lot. And a big part of that comes from data brokers, hundreds of them, quietly collecting and selling your personal information, your phone number, email, home address, job title, all out there and all fueling identity theft, scam calls, and spam. If you've ever searched your own name online, hands up, who hasn't? You'll know how exposed you really are. That's why we've partnered with Incogni. They contact 230 plus data brokers and tell them to delete your information properly and legally under GDPR and CCPA. Doing it yourself would take hundreds of hours. Incogni automates the whole thing and keeps working with repeat removal requests if your data reappears. I tried it and within days saw brokers deleting my data. You can even protect your family members too. Fintech Insider listeners get 60% off an annual plan. Just head to incogni.com/Fintech Insider and use code Fintech Insider. And yes, it's risk-free with a 30-day money-back guarantee. You'll find the link in the description.
Hello and welcome to episode 1084 of Fintech Insider News, brought to you by 11FS, the sixth-time consultancy of the year that works with financial providers big and small to build the next generation of financial services. I'm Laura Watkins, Director of Media and Marketing here at 11FS, and to help me unpack the biggest and most interesting stories from fintech and financial services from the past week, I'm joined by a brilliant panel of guests. First up, we have a welcome to the podcast for Alessandra, Chief Product Officer at Teya. Hello, Alessandra. Welcome to the show. Could you tell us a little bit more about yourself and Teya, please?
Yes, of course. So thank you so much for having me, Laura. Excited to be here today. So I have been working in the fintech space for more than 10 years, always in the small business, payments, banking side of things. Originally in Brazil, where I started in a business that we were like 20 people. That business grew to an IPO, 16,000 people, and quite a success story there. And then I decided to move to Europe and join Teya, where we're also focused on small businesses and everything that comes to money. So Teya is basically an European fintech focused on helping on payments, banking, credit, and software products for all local businesses.
Brilliant, thank you. And obviously, as I teased at the top of the show, you have some news that you will be telling us about very shortly.
Exactly.
So thank you so much for joining us. We also have a welcome back to the show for Simone Joyce, Chief Executive Officer at Paypa. Welcome back, Simone. How have you been? And can you tell us a little bit more about what you're up to at Paypa, please?
Yes, thank you, Laura. It's lovely to be back with you all. Yes, happy to. For those who don't know about Paypa, we work with payment agreements as a service for banks and enterprises, but increasingly as payment agreement frameworks for payment industries. That's something that we're increasingly doing with both the Australian and the UK industries at the moment. A payment agreement is essentially a digital token that can travel on any transaction rail with any payment for pay and not present payments to make sure that things like payer consent, what's happened over time, who agreed to what and when, can travel with the individual transactions. And that's designed to introduce a whole lot of transparency and functionality for end users, but increasingly address first-party fraud or dispute fraud, introduce interoperability across the top of payment systems as new ones are introduced, and to help ensure that domestic regulatory and policy settings can apply as global technology players play an increasing role in our payment industries, such as with agentic commerce.
Amazing. Thank you so much. And last but not least, completing our panel, we have a welcome back to the show for Sophie Winwood, co-founder and CEO of Unlock VC. Sophie, great to have you with us. How are things and what can you tell us about Unlock VC?
Yeah, things are really good, actually. I think it's definitely not slowing down yet. We thought we'd go into a bit of a summer slowdown, but I don't know about everyone else, still very busy. So yeah, I'm co-founder and CEO of Unlock VC. We are a community and platform for women in venture capital, but I'm also a fintech investor, VC investor, and angel investor myself, and have been a certified fintech nerd for a very long time now.
Oh, that's what we love to hear on this show. And all of your many skills are going to come into play as we get into this discussion. So let's get started. Our first story today is that Ant International raises $1.2 billion in a Series A round. The story in Finextra and many other places. So as I said, Ant International raised approximately $1.2 billion in a Series A funding round with participation from Ant Group, Alibaba Group, and a number of international investors. Since becoming an independent business in 2024, Ant International has focused on helping merchants operate across borders through its 4 core businesses, Alipay Plus, Antom, World First, and Better. Today, it connects more than 150 million merchants with over 2 billion consumer accounts worldwide. The company says the funding will accelerate its global expansion and further develop AI-powered payment, treasury, account management, and financing services for merchants and enterprises. Okay. So this is an unusually large Series A at $1.2 billion. It's bigger than many companies raise across their entire lifetime, let alone in a first round after spinning out independently. Sophie, coming to you first with your sort of investor background, what does this tell you, and sort of why is this round so large?
Yeah, I think firstly, for everyone out there who is currently thinking about or raising a Series A, this is not a Series A round. I think the reason that they're using this nomenclature is because it's the first round post the spin out. But I think, just a little bit of history of Ant Group, which is it was spun out of Ant Financial. Ant Financial is a huge Chinese fintech of its own right. Back in 2018, which is when I first got into fintech, it raised the biggest round in the history of private funding, which was 14 billion, I believe. And so, it's an established company. It's a huge company. It's a company that's already been proven to be able to grow and scale. Ant Group actually was supposed to IPO in 2020, but that was suspended due to regulatory reasons. And so, really, it's not an early stage bet here. This is a late stage bet, and it's not a kind of go to market capital. It's really fueling, what is an internationalization play.
Yeah, definitely. And like having kind of worked on the show from a similar period, every time we talk about that 2018 raise, we always have to count it as an anomaly in anything you're talking about fundraising. It's like, oh, but apart from that one,
Exactly.
because it was so monumental at the time. And yeah, as you say, like this is the use of the phrase Series A is a little bit cheeky in that context. But yeah, there's no getting around the fact that this is obviously an enormous raise here. Simone, what was kind of your thoughts on this one? Obviously, Ant International, as Sophie said, only just become operationally independent. But yeah, what are kind of investors seeing and investing in here, do you think?
Look, I also had a giggle when I saw that it was called a Series A round. And I wonder what the logic behind that was, and whether it's signaling that they will be doing a Series B round at an even bigger rate soon. I think it's a really interesting space they're playing into, where potentially we'll see more mega rounds. And we might touch on this when we come to talk about Revolut in a little bit. But that international connectivity through, business payments and global commerce, it's just such a hot spot at the moment, and there's some really big behemoth companies playing in it. We've got Airwallex. I think we'll see. I don't think Wise is done yet in that respect, and I think it's in a way putting potentially domestic banking industries on notice as they think about what that means for their local customers as well.
Yeah, that's an interesting point. Actually, coming back to you, Sophie, just for a comment on that, like in terms of those enormous rounds and sort of where Ant's positioning, are they kind of a category of one, do you think, in terms of what they're trying to achieve? Like who is likely to compete with them at that kind of size and scale?
Yeah, I think, it's kind of like the 14 billion round, which I would look at this as an exception rather than a rule. And, I'm a positive person. I like to get excited about good fintech news, but I wouldn't take this as a signal that the market is kind of turning around, and more as an exceptional funding round for a very established business that's really taking on an international expansion, and doesn't really kind of fall into that classic will they raise a Series B? Who knows? I think it's almost like a pre-IPO signal in a way, in terms of naming the valuation, kind of spinning out, and kind of setting an objective. So it's exciting because it's a big company, and it's also exciting to see big companies raise lots of amounts of money and have big bets. It's obviously aiming to be a category defining business rather than just a large business, but I still think there are aspects that need to be played out here. And as any company that knows, expanding internationally is not easy, especially if you're a fintech and you're regulated in different markets and kind of product requirements. So, while I would say it's not a classic venture bet in terms of, the risk is not that high here, but I think there is still risk in terms of what is the, end kind of position with this company.
Yeah, definitely. And I like what you said about it sort of being not just a company, but a category defining company. And Alessandra, I want to bring you in here for your thoughts on that. Ant was originally best known for Alipay. Now it's looking at sort of global financial infrastructure, serving merchants rather than consumers. What's your thoughts on that kind of change in approach? And is this sort of the direction that most people are heading, like focusing on infrastructure?
Yeah, what I would say is that I think in a lot of cases, China is a category of its own, and especially Ant Financial coming from there, and the way that they were able to create this like double-sided market where they had the merchants and the consumers from the beginning. And I think this is something that we see in China that is not necessarily replicable around the world. So I think themselves, like they're really a category of its own. Maybe they're comparable to WeChat and other players more that emerged from China. What I think when it comes to Ant is specifically is that now they want like more than that, and I believe that's one of the reasons why they did the change in how they operate. And I truly believe that like the borders and the frontiers that we were seeing in the payment space, they're diminishing more and more. And now everything is becoming much more global, and players that already have like a market of reference normally tend to benefit from it because they travel with their merchants and their businesses, and in their case also the consumers. So I think it's going to be interesting to see what comes more and more from them.
That kind of like cross-border element I think is really interesting. I'd like your thoughts on that, Simone, as well, in terms of like friction points operating across multiple markets. Does something like that, something like what Ant is offering solve for that?
I think certainly for some merchants it does, and it's interesting that they're using the term merchants because for me anyway, and I might be reading this in the wrong way, merchant to me is a slightly different breed of services than business banking services, but potentially that line's getting blurred a little bit more. And, it might be entirely possible for a company that operates in multiple markets to completely lock a lot of their liquidity up into what could become a bit of a closed loop environment, to move it around their different operations. How does that actually fit into who's protecting that money? Is that a local banking service that we're backing into as it lands in each market? How does that actually shape up? From a friction perspective, I think it would absolutely help a lot of businesses reconsider the cost of doing business across markets, which is a good thing.
And switching gears ever so slightly, Alessandra, it's rare these days to get a press release that doesn't in some way mention AI. Is there any surprise here that a lot of their focus is kind of building AI into some of their processes and infrastructure? And, how much is that sort of actively moving the needle for their end customers?
Yeah, I think what is happening with AI is I feel that most companies right now are building with AI. And I don't see anyone that is not necessarily doing that in some shape or form. Maybe some companies are more advanced on that journey than others, but everyone is building with AI. I think offering AI as a product is, or embedding AI as part of their product is something that we're still understanding how that will be. And different players in the industry are operating in different places. I think there's a lot of discussions related to like agentic commerce and how people will necessarily buy in the future. And honestly, I don't think anyone knows. And there's a lot of bets on what that will be. But I feel that in terms of AI and financial services, not only improving, let's say, the speed or decreasing the costs of a lot of the operations or like companies in terms of providing products, there is much more that can be built in terms of embedding AI as part of the product itself. And if there are companies in a position to do it, probably they are one of them. So it's going to be interesting to see what comes back from it. We don't know how much is because of like everyone puts AI in a press release and how much actually comes from it. But I think we can never, like they're always an interesting player to watch.
For sure. And Sophie, I want to come to you, like just to kind of round off this segment. And International operates across Asia, Europe, the Middle East, and Latin America. So they're covering a lot of geographies. But how difficult is it still to build a truly global fintech business? If Ant does this properly, what does success look like for them, do you think?
I think that's the kind of interesting and what is a real moat in why I think a lot of companies are trying, or fintechs are trying to achieve this sort of like international sort of offering, is because it is really difficult. Every country has its own regulatory restrictions, different customer appetites, different ways you have to produce products. And so it's not as scalable as, an AI product, consumer product. But I think what we're realizing is that scale, you win with scale. Everything, becomes cheaper, the data becomes more robust. As Simone was talking about, you kind of get these closed ecosystems where, there are risks to that, but also there are benefits in terms of cutting fees on a lot of these products. And so I think we can see why what happened with FinTech 1.0 was this unbundling of fintechs trying to kind of take off different parts of the banking ecosystem and build, and realizing that actually the unit economics don't quite work out unless you have scale, and scale comes with geographical expansion, products expansion, and then real depth of process in terms of kind of building the rails so that you become sticky and very, very difficult to leave.
Amazing. Thank you. Well, we could probably unpick this even more, but I am going to move us to the next story. But yeah, what we've learned from this is not a real Series A. It's a company that was already very established, earning an awful lot of money. But we'll, definitely keep an eye on how that expansion goes for them. But I'm going to move us to our next story, which is that Teya expands its business account with bill payments and cashback cards. Teya has announced a major update to its business account, adding automated bill payments, cashback business cards, and enhanced spend management tools for SMEs. The new offering allows businesses to scan or forward supplier invoices for payment approval, issue personalized physical and virtual cards to employees with spending controls, receive instant settlement from card transactions, and manage their finances through a single app. The company says the launch is designed to reduce the administrative burden on small businesses by bringing payments, expense management, and accounting integrations together in one place. Naturally, Alessandra, it makes sense to come to you first on this. Can you tell us a little bit more about this, about sort of how you identified these pain points in order to try and address them?
Yes, of course. So I think just giving a little bit more color on Teya, we focus especially what we call local businesses, which have like 1 to maybe like maximum like 20 locations, and the owner is pretty much like really hands-on and super involved. And I think from most conversations that we have with our members, what we see is that when it comes to money, that's the place they don't delegate. and they don't want people to necessarily have access to their bank account or to see how much they save, the way that they spend the money. So it relies a lot on them. But suppliers, employees, and a lot of that, different from consumers, they tend to have hundreds, dozens of people that they have to pay. And it was that 2 hour in a day that the person would stop and get all the invoices, make the payments, and so on. And we felt that a lot of this could be automated and offer a bit of what enterprise companies already have in their toolkit to the type of businesses that we serve. So it's basically easy ways for you to forward bills. So you receive on your email, you forward to Teya, we put all the information. If you want to only delegate the access to upload bills, you can without the person having access to withdraw the money or to see all the statement movements and so on. And the same with employee cards. This is one of cards is one of our leading products on the business accounts because we give 0.5% cashback, which is something that in Europe is not necessarily common because of the caps that exist on consumer cards in terms of interchange. And we said instead of just giving your card for someone to expense it, leave you can have one at a shop, give one to the manager, one for emergencies, and kind of use that more and more because you're always getting something in return. So this was a bit of the idea towards this launch and how we make those day-to-day tasks that takes a lot of time, but they're not necessarily fancy, and we just automate so our members can focus on what they like to do. Because no one opens a business to pay bills. And all this bureaucracy in bigger companies, you can have someone from a finance team to do it. Our members don't. So how we can help them with it. That was a bit of the idea towards it.
Amazing. Thank you. For that overview. That was great. And then sort of in terms of obviously the products and services that you're offering, is it now less about giving businesses the tools and then more about the tools actually working better together in order to kind of reduce the friction on either finance teams or one-man bands?
Yes. And I think for a long time, banks and financial services, they were more leaning towards the payment rails. You can do transfers, you can use cards and things like that. And everything spend management related or was not taken care of at all, or was in another software, another tool, and they had to procure that as well. What we were really focused is, doesn't you can use all the different ways you want to pay, but we wanted to focus more on the process itself than the payment rails alone. And I think this is what we are trying to do, because sometimes on banks you see you're paying. It doesn't matter if it's by card, by transfers, via direct debits. I think the process of paying is more important, and this is what we try to focus on with it.
Amazing. Thank you. Simone, you were kind of nodding throughout everything Alessandra was saying. What's kind of your thoughts on this and sort of how the challenges for SMEs are kind of moving forward in the payment space?
I was nodding because I really appreciated some of the care that's gone into designing the product for your members, Alessandra. So well done. I think this is an interesting space because it's one that has become, I think, the latest battleground for banks to own customers, but it's also a really hard one for them to do, as well as some more dynamic, nimble companies can. I think traditionally, small business banking has been really tricky on the unit economics to get right for the larger banks. And this is totally oversimplifying. So apologies to all of the SME bankers that might be listening. It was originally seen as a loan factory. So how do we get businesses in so we can loan money out? And that's where we make our interest revenue. I think there's an increasing need to go, we need non-interest revenue, and we need to become the prime financial partner for these businesses. That's really challenging when you've got companies like Teya developing what feels like a bespoke service for your company, and being able to do that with a lot of rapid product deployment. It's an interesting time for banks as they're under pressure from competition in their sector, but also competition from companies designed to solve needs at a specialized level.
Definitely. And Sophie, coming to you, obviously as a an investor, you're obviously seeing a lot of businesses that are looking to scale up. What's your take on sort of how much that sort of cash flow is king, is still like the kind of the North Star of small businesses, and how products like these can help them with that?
Yeah, I think, VCs have always looked at businesses that target SMEs with a little bit of caution, because SMEs are this huge homogenous group. They are very expensive to acquire. They have very high churn rates. And it feels like it's a difficult space to sort of find success in, which is why you need to build a product or need to have a product that where SMEs really need. It's the lifeblood of the business. The cash is king. Payments is where everything starts. And so having that as the wedge product is super smart. But then I think, being able to build products on top is really, really important. So you want to, increase the amount of revenue and that you can get from these SMEs, but also increase the stickiness, make it harder and harder for them to leave. So no, I think it's really smart. And as a small business owner myself as well, it's so needed.
We can definitely chat about it, Sophie, because I feel that it's what you mentioned, right? There's so many small businesses with different needs, and at least our view is how we find a niche.
Exactly.
Tell me more, Alessandra, about the sort of AI inclusion in it. So part of the press release, the launch includes AI-assisted invoice processing. Just out of curiosity, like, is this coming from a customer demand, or is that an internal decision to use AI just to, simplify the product for the end customer, as opposed to the customer being bothered whether or not you are using AI?
I would say that we had while a lot of companies said started putting AI everywhere, we said we're not going to do that until we find we believe that we have something that can actually be AI and not just getting rebranded because now it's a hyped. So our thoughts with AI were, it really redefined the way we work, and it has been this amazing thing that I believe a lot of people are leveraging. And naturally, I would say bigger, more established companies tend to have a bit of an advantage on learning about all those stuff and also in the use of it. And that started with we said, let's ask some of our clients, and we would see some of them have really changed their setup to use it, while others were I tested, but it's I'm not actually engaging. And the numbers were quite surprising for me, at least that we have 40% of our clients not using at all. And then we said, how we try to also not create a AI product that is only about Teya? Because I feel that a lot of the AI products out there that come as something else from bank, financial services, or even different sorts of tools, they're an AI focus on the data that they have or the things related to finance. We said we don't want to help them only with that. So how we create an AI that if they want to say, answer this Google review for me, that will help. How they can say create my next Instagram post, it can help. What are my busy hours of the day? It can help. My tax filings, it can do it. So it's a bit of how we bring the LLMs and everything that comes into an interface that our clients already use it. Because I think from a difference when you think about business banking versus consumer banking, is that our clients, they use our product every day, multiple times a day. So we are already an interface for them. It's not something that they use occasionally. So why we don't bring something of AI there, and this can grow and compound. So this was a bit of the idea behind it. And what we have seen so far since the launch is that the interface of how people will engage with financial services, I think nobody knows really how it's going to be. And it's been interesting to see how a lot of our clients are using the AI to say, create me this Paypa link. or pay this bill, instead of using the regular interface that we have. So it's been interesting to see that there are so many use cases for it. And we spoke a little bit about like international payments cross-border, and especially the UK is a market that there's so many like international business owners that sometimes like prefer to use their first language. AI also helps with that because they can say, pay this bill in whatever language that is, instead of having to go through like all the processes in English just because they live here. So we're seeing a bit of that. And what is good is that it's easy to compound. And the more we learn, the better it gets as well.
Wow, that's so interesting. Right, kind of becoming like a business partner for your customers rather than just giving them a tool and letting them
Yes.
sort of just figure it out for themselves. That's very, very cool. Well, thank you so much for telling us all about that. Unfortunately, we are out of time, but yeah, congratulations on the launch. It sounds fantastic, and yeah, please do come back and tell us more about it on future episodes. But on that note, we're going to take a quick pause right here. Back very shortly.
It's 1938. The 2-week pay period is invented. But then the world got faster. Faster travel, faster delivery, faster everything. Except our pay. Until now, with Daily Pay, everyone can access money they've earned when they need it. Yes, this is the future of pay. Daily Pay. Work with the leader in on-demand pay at dailypay.com. Transfer fee may apply.
Before we get back to the news, we've got some big news of our own. We've just launched our latest After Dark event, and tickets are available now. Join us at London's Village Underground on Wednesday, the 17th of September for a live recording of this podcast, Fintech Insider News. Head to 11fs.com/After Dark to claim your free ticket today, and we'll put a link in the description below as well. Back to the news, and our next story this week is that Revolut has secured an Australian banking license. Revolut has secured a full authorised deposit-taking institution, or ADI, license in Australia, allowing it to launch as a licensed bank in the country and marking its first banking entity in the Asia-Pacific region. The company says it will invest almost 400 million Australian dollars in Australia over the next 5 years, expanding its product offering to include savings and credit for its more than 1 million Australian customers. The license is the latest step in Revolut's global expansion strategy following the launch of Revolut Bank in Mexico, regulatory approvals in the UAE and Peru, and its ongoing application for a US banking license. Right, Simone, as our resident Aussie on the recording today, it makes sense for me to come to you first. What does this mean for the Australian market? Can you tell us a little bit more about sort of the existing landscape at the moment and where Revolut fits into this? Obviously, we heard they've already got 1 million customers over there anyway. Like, what difference will the banking license make?
Well, first of all, a big congratulations to Matt, who is the CEO of Revolut, and his team in Australia. And it's an enormous amount of work that goes into achieving an ADI license. So well done there. I think, look, when I saw this news, I was really pleased. We haven't got the strongest history of neobanks retaining banking licenses in Australia. In our heyday, we had I think, 5 or 6 that had all kind of bubbled up at once. And I used to say at the time that they were like the signal species for the health of the fintech ecosystem. And then one by one, all those licenses got handed back or they got acquired and gobbled up by one of our larger banks. So it wasn't necessarily the right message to be talking about a signal species at that point. However, Revolut has, to your point, established 1 million customers before this banking license was awarded. So they're already addressing some of the issues that some of the previous neobanks had. They actually were quite interesting. For about a month there, and I think this was about 5 or 6 months ago, you'd get off a plane in any domestic terminal in Australia and you'd walk up the air bridge and down the side would be Revolut's reached 1 million customers, just a giant banner. No call to action, just to let you know that they had 1 million customers. So really interesting signalling about how popular they already were in the market. What I think the banking license will do for them is a couple of things. It obviously is another hop in their global connectivity channel. And I think a point of difference with Revolut to some of the other companies in this space, Airwallets and Wise to some extent, they have banking licenses in these countries. So they're bringing the financial deposits and instruments into a protected setting. So there's obviously the guarantee on deposits that the government has here, similar to the one in the UK. The second thing is it does allow them a little bit more margin on things like being able to connect directly into payment systems without going through an intermediary. And when you're looking at, Alessandra mentioned interchange caps in Europe, ours is reducing in October, so it's closer. So there's less margin in the payment, in the interchange you're making. So that direct connectivity will be really helpful in that respect. I think that they will continue to now build on the momentum that they have with that 1 million customers. There is a strong brand awareness here for them. I think the fact that they have clearly signalled that the domestic investment over the coming years is a great signal for the what we can see from them, and we'll probably see Revolut on our sports teams and racing cars and things like you do with fintech after they do something like this. But I also think that we'll see some increasing pressure on things like the interest rates that are being offered by Revolut. What the response will be from the incumbents will be really interesting, and how this then puts pressure on things like business banking services and global business banking as well as domestic. So yeah, interesting times, and it's a great milestone for them.
Yeah, definitely. Thank you for that very comprehensive overview. Sophie, maybe coming to you, obviously, we've sort of talked about a lot of fintechs maturing, and sort of the banking license becomes like the ultimate North Star. Why is that sort of so important as these fintechs mature? Revolut, obviously, as we mentioned, getting various approvals in many different markets. The US still kind of eluding them. The UK only just been awarded. Why are they pursuing that as a sort of badge of honor almost? What are your thoughts?
Yeah, I think it's really driven by kind of economics rather than vanity. And over the last couple of years, we've really moved from this growth at all costs mentality to a more sustainable growth model. And so with that needs to come sustainable unit economics. And the way that you do that is once you have the kind of volume of customers. That's why the kind of word mature in your question is really important, is, fintechs are pursuing banking licenses, but only when they've got the scale to make the unit economics happen. Because when you've got a license, you can hold deposits. That's obviously like a great, cheap, sticky product. It also comes with a bit more of a feeling of trust. You have to trust a financial institution quite a lot for them to hold, for them to get your pay paid into that bank account, for you to hold the deposit. It obviously then opens up the balance sheet for you to use in terms of lending and multiple different other products, and really kind of driving the margin on your business up. So I think it's an essential part of them evolving and just being able to monetize the 1 million customers that they have more effectively.
Definitely. And Alessandra, with your sort of product expertise, Revolut has sort of had the tagline for a while of like the ambition to be the world's first truly global bank. The word truly there, maybe a diss to HSBC, I'm not sure. But what is that? How is that vision kind of playing out here? And how realistic is that when you are pushing into so many different locations? Is the experience likely to differ place to place, or are they trying to go for a sort of a signature Revolut experience no matter where you are?
Yeah, what I would say is, and like I come from Brazil, which is kind of like this continental country, but it kind of isolated on its own. That maybe Simone believes as well from Australia, in the sense that what I believe, and at least one of the biggest learnings for me from a product perspective, that I believe payments has become a bit of a global product, and you have like multiple really big companies like the Stripes, the Adyen's, and so on, that have been able to create this global payments ecosystem, because you have the schemes, it's quite regulated in a lot of senses, so it's easier to get there. When we think about banking, I truly believe it's a much harder milestone. Even in Europe, where you have one license, one of the things that I say to my team all the time is that there's no United States of Europe. Even though you have one license, you have like all these different payment rails, different tax authorities, different ways that you need to address regulations. So it's quite an easy task to become this global business global banking element. But what I would say is that I think the way to go is to actually not be around the edges and only play more on the cross-border space, but actually securing the licenses and doing the work to be relevant. Otherwise, you're never going to be able to actually replace the ones that are there. And I think from a unit economics perspective and great businesses are the ones that get principality. And the people choose to be with them for the long run. And I think banks are built around that. So I think the strategy is really on point.
Fantastic. And then Simone, kind of building on that relevancy point that Alessandra mentioned, like essentially sort of why Australia, why now? Like why, as we said, a million customers, but why is now the right time to kind of really not just have the license, but that huge injection of money that Revolut is also planned to invest in Australia? Like, what does that tell us about their kind of ambitions?
I think there is an element, and maybe, this is just guessing. We're also in the middle of having a bit of a transition into an environment where we have tiered payment licensing in Australia, and that's scheduled. It's behind schedule, obviously, but it's meant to happen next year. Some of that addresses stored value facilities, which is where Revolut has been sitting up until this moment. And that stored value facility is going to transition into having more requirements, which does kind of lock up a lot of money in security holdings. It almost makes it, to Sophie's point around the value of holding a banking license, is being able to monetize those deposits. You can't do that if you're a stored value. So I think that timing is really interesting as well. I think Revolut's been in Australia for some time, since around the same time that they applied for their UK banking license, actually. So potentially there was a sequencing there. Australia is often thought of as a bit of a local hub geographically to then push up into Southeast Asia as well. So there may be some lily pad hopping that we might see from them next. And then more broadly, Australia is an interesting market for fintech at the moment. We're seeing a lot of companies maturing, but in a more organic way than we might have done in years past, where we would have seen investment cycles being announced and accelerating. We're actually seeing growth through stabilizing business models. So there is an element of the fintech industry is maturing, but at a more stable pace than we might have seen in the past. So maybe all of those factors combined into one.
Brilliant. That's a really good overview. We don't obviously cover Australia as much as some regions on this podcast, so it's really good for to kind of lay the foundations of why this is such a big move. Sophie, just to finish this section off, speaking of big moves, producers have a slightly knotty question for you. So if a banking license become table stakes kind of going forward, what is the next differentiator that you would potentially look out for?
Yeah, spicy, naughty question. So I think, scale is one thing, but really the ability to be global is just one side of it. The other side is being local, being able to understand your customers quite in-depthly, be able to reach them where they need to be reached, and be able to create products that are customized to different people's circumstances. So I think, we talked a lot kind of a couple of years ago about in context fintech and insurtech and kind of rising products at the right time. And I think Revolut, one of the products it did, which was kind of exciting, is it saw that you booked flights to a holiday destination, and then it surfaced travel insurance. So I think while the global scale is really exciting and the kind of offering of more traditional banking products is good for economics, where the interesting and fun part comes is using all of the data from the huge amount of customers to create more personalized products that are delivered in context and at the right time.
Can I add something to that answer, which builds onto your previous question, Laura, that point around honing in on your individual customers in a local sense? Potentially, they were doing a little bit of that as they thought about the sequencing of their banking licenses and looking at the corridors between where their users were travelling, were spending money. There is quite a large UK diaspora down in Australia, and potentially there is that establishment of corridors between where people are spending that built on their sequencing strategy globally.
Fantastic. Well, we will have to keep an eye on both of that and see if what you predicted turns out to be the case. But on that note, we're just going to take a quick pause here and back very shortly.
Choice Hotels get you more of what you value. Here's a little tune to help you remember. Same drive, different day. Don't you wish you were getting away? Pack your bags and come on through. Texas, Ohio, Alaska, we're up there too. Comfort Inn, it's calling your name. Save on the stay. Oh, and free waffles are yours to claim. Well, I hope you like my little song. Book direct at choicehotels.com.
Okay, now for a quick look at stories we didn't have time to cover in full. This one comes from the papers. Wise launches international transfer service in Chile. So Wise has expanded into Chile, allowing customers and businesses to send Chilean pesos to more than 40 currencies across 160 countries through its international payment network. The launch gives Chilean customers access to Wise's multi-currency account, enabling them to hold and convert funds across multiple currencies while receiving international payments using local account details. The company says its transfers use the mid-market exchange rate with transparent upfront pricing, and that 75% of payments settle in under 20 seconds, with 96% completed within 24 hours. Wise says the move reflects growing demand for cross-border financial services in Chile, where outbound remittances reached $2.27 billion in 2025. The launch also expands the company's footprint in Latin America, following earlier rollouts in Brazil and Mexico, as it continues to grow its global network, which now serves 19 million active customers. So this one is super interesting. Obviously, LATAM is not a new market for Wise, given those rollouts that were just mentioned in Brazil and Mexico, but it is an interesting example of how appealing the LATAM market has become. Revolut, Nubank, all stealing a lot of customers in that space. It's a huge competitive growth market for financial services. And the opportunity kind of goes beyond remittances as more people work internationally, study abroad, run businesses across borders. The demand for cross-border financial services continues to grow and remains a pain point for many people that Wise are obviously best placed to try and solve for them. And Wise has consistently differentiated itself by challenging the traditional economics of international money transfers, mostly focusing on that transparency piece, speed, and customer trust. So it's very interesting that they're kind of doubling down on that in this market. There's obviously that huge opportunity space, that $2.27 billion of remittances in 2025 that I mentioned. So there's obviously a huge space for them to play in here. And obviously more broadly, we're seeing fintechs compete on a global financial infrastructure space rather than just products. People don't just want to move money internationally now. It's more important to make cross-border financial services feel as simple as domestic ones. And that's sort of the story of Wise in a nutshell. So it'll be interesting to see how they make a splash in Chile. So I'm going to take us now into our and finally story, one of our more lighthearted or zeitgeisty stories of the week. And this one is that Christopher Nolan's The Odyssey has become his biggest global box office opening ever. The story in Forbes, and please do stay with me, I promise there is a fintech link. So Christopher Nolan's latest film, The Odyssey, has become the biggest global opening of his career, taking more than $264 million worldwide during its opening weekend, which has exceeded industry expectations and been the biggest ever opening for Nolan and his lead actor Matt Damon. It's also the first feature film shot entirely using IMAX cameras, with premium IMAX screenings accounting for almost a quarter of all ticket sales. Despite the strong start, it reportedly needs around $625 million to break even, reflecting its estimated $250 million production budget and $125 million marketing spend. All right, a lot of big numbers there. Before we dig into that, has anyone seen it yet?
No, I'm trying, but like in London, like we have the IMAX 70 millimeters, but there's like 2 of them and they're sold out until October. So I'm like, I don't know if I go watch it and then go there or if I wait until I can get the tickets.
Sophie, did you say you have?
I have, yeah. I did the thing, which is I just went and saw it in my local cinema, my local picture house. Didn't see an IMAX, but I just wanted to be involved in the opening weekend hype, and it is epic. It is so good.
Is it? Okay. I'm going tomorrow in the IMAX.
Lovely.
I'm very excited.
Amazing.
But I haven't yet seen it. Yeah, I mean, it just joined some sort of pre-sale and booked a while ago, but it was a bit frantic. Simone, how about you?
I haven't seen it. I studied the Odyssey when I was doing history at school, and I'm a little, like, I won't watch Gladiator because I'm like, I don't want to see any of that. So I'm a little nervous. There's some fairly gory bits in the Odyssey, so I might wait until it's at home so I can sneak out at the optimal moments and hide.
Fair enough. Yeah. Yeah, I equally studied classics for several years and at uni, so I like this sort of ticks all of my boxes at the same time as it might be a lot. But as I was saying, that this is sort of isn't just a film story; it's an investment story. So kind of studios putting hundreds of millions of dollars behind fewer, bigger bets in the hope of a return. Sophie, does that sound familiar to you? As an investor,
absolutely. I think that is so analogous to the venture market today, which is concentration in smaller number of de-risked kind of bets that are, rather than kind of the spreading high risk bets that we as ventures should absolutely be doing. You know, everyone at the moment just wants to be an Anthropic and ChatGPT, and it's kind of similar in the film industry. You know, you almost know that the fantastic director like Nolan is going to deliver something incredible, especially with that amount of capital behind it. It's almost like capital becomes a moat as well, in a way. You can only achieve the sort of things that Nolan achieved with the backing that he has. So it's very similar. It's very similar.
But also kind of relating to what Alessandra was talking about really wanting to go see it in the IMAX. There's a lot that has been talked about, like the kind of the IMAX experience and that sort of a sort of premium experience that comes with it as well, which is also shown by 23% of ticket sales coming from IMAX, despite there being, I think I saw a stat that's like 40 IMAX cinemas at all, like in the world. So there's definitely a lot to be said for that kind of creating a sort of premium experience that people really want to buy into. Obviously, we're guilty of that, like booking ahead to make sure we can definitely see it in the IMAX. Like Alessandra, you having to think through whether you want to wait or whether you want to see it sooner and then have the IMAX experience later. What was kind of your thought on kind of customers paying in advance for what they consider to be a better experience? That's definitely something that we can kind of draw some parallels with in our industry as well.
What I would say, at least from my side, is I feel that like with our lives between like what is digital, what is physical, and so on, there's a lot that has changed on how we like. I love movies. I think I watch like 3 or 4 a week. And when I think about going to the movies, I think there's more about like not only what's new, but about the experience of what you get from being there. And it's interesting to see how, at least like in my local cinema, as much as there is all the news, there new movies, there's always like a bit of those like old classics that I feel that a lot of people, they're not like what made like the effect of going to a movie. I think it's changed about being this like, oh, let me see this thing before everyone else, but about the experience of being there, enjoying something that you like, or going through like a different experience, which I believe the IMAX 70 millimeters creates. So I of course this comes at a price, and I think what is happening is that I think movies are becoming a little bit more premium because like maybe the people that would not splurge on it now prefer streaming. So that's a bit of maybe that's happening.
Yeah, that's a great point. Like kind of customers are just sort of picking their lane that they want to spend on and curating the experiences they want to have. Simone, any final thoughts on this one?
I think I wonder whether the choice to do it on this ultra special 70mm IMAX film was an intentional creation of scarcity and premium tickets, or whether it was purely an artistic love that Chris went, let's just do it like this because it deserves it, and people will buy tickets at any movie cinema, but there will be this elevated experience for the cinephiles to really get into the romance of old cinema. Maybe a bit of both. I think it's a challenging thing to go actively after that premium strategy. Luxury brands, I think, are now reimagining how they do that. So it'd be interesting. I would have loved to hear the decision-making process as they thought about it.
Yeah, for sure. I definitely think it could have been a bit of both, but also, it is interesting, like how kind of elitist it almost is as a deliberate kind of creative choice. But yes, we will see. I mean, I think, given the numbers that it's already drawn in and the fact, to Alessandra's point, the IMAX is booked up until the autumn, I think it's likely to break even on those numbers, but we will see. And on that note, that concludes today's episode. Thank you so much to my guests. Where can people find out a little bit more about you and your companies? And let's start with you, Alessandra.
Yeah, so people can find more about Teya on teya.com, but they can also check our LinkedIn or Instagram and find us there. And about me, I'm not so much on social media, but LinkedIn is the place to find me.
Brilliant. Thank you. Simone?
Very much the same as Alessandra. I'm not on social media, but you can find me on LinkedIn. You can find Paypa Plane on LinkedIn, or you can find us at paypaplane.com.
Fantastic. Thank you. And Sophie?
I'd love to have a more original answer, but it's exactly the same. Find us on unlock-vc.com. And I'm on LinkedIn. And yeah, I just remember doing this a couple of years ago and everyone would say their Twitter handle, and alas, gone are the days.
Yeah. I could tell you my Twitter handle, but I haven't actually logged in for about 2 years, so it would be no use to you. You can find me again on LinkedIn, Laura Watkins, or otherwise 11fs.com or on this podcast. Thank you so much for listening to today's show. If you like what you've heard, please make sure to follow us on your favorite podcast platform of choice. And if you really like what you've heard, why not share the podcast with a colleague or friend? And equally, if you want to join the conversation, find us on social media. Just search for 11fs or Fintech Insider. We're probably there, or email me and the team podcasts@11fs.com. Thanks again and goodbye.